All right, so we just hit it. S&P and NASDAQ very close to all-time highs. S&P hitting a new intraday high yesterday. Jamie Dimon out there in Davos, latest voice to once again say the market's trading at a very lofty valuation. Are you concerned about that?
I'm not sure concern is the right word. I mean, we're certainly paying attention, but lofty valuations have to be constructed. If we're talking about something like the S&P 500, and if you look at the Mag 7, those are those have price earnings ratios or multiples that are in the 30s. Look at the rest of the market, those multiples are like in the 19s, and so like overall, like that, it seems like the market has a very high valuation, but if you break it down into sort of like component parts, it makes sense why the Mag 7 has such a high valuation. And the rest of the market is sort of normal. So, I think we're watching, but I don't think concern is the right word.
All right. What do you think about just some of the moves we saw from tech? Tech getting a big bounce from the Stargate project announcement. We're seeing those stocks pull back. It really seems like investors, they just kind of go back and forth on their view. Do they want to see a broadening? Do they want to continue to ride those tech stocks? How do you view the market right now? Do you believe we're set up for a broadening, or do you see tech again taking leadership? This week, it is taking leadership with tech as the leader, energy as the laggard.
Frank, I think actually it's going to be a tech-led broadening, if I can kind of coin that one.
Wait, Scott, how's that possible? How can it be a tech-led broadening?
So, I think it's going to be one of these where the technology, the AI tech, is going to sort of diffuse into the rest of the economy. And so, the firms that are able to actually, adapt to the AI revolution, they're actually able to use AI processes in their businesses to improve productivity and therefore improve margins, which is really the game. Those are the stocks and those are the sectors that are really going to benefit. So, that's, in terms of broadening, I don't think it's going to be broadening from like a traditional kind of small cap, everything rallies, cyclical kind of move. It's going to be broadening that is, that's really kind of led by those companies and those industries that can really take hold of the AI, the power of AI and the power of the productivity gains you can get out of it, and use it to drive margins.
All right, so it's going to be a tech-led broadening led by AI stocks. It's a bit of a confusing thesis, Scott, but I do want to ask you about your other thesis here. You believe the Fed's next move, I don't know if it's January, I don't know if it's a future meeting, but you think the Fed's next move is to raise rates. Doesn't that impact this whole broadening thesis overall of other stocks participating in the rally? I mean, tech has the balance sheet where they don't really need to borrow money. So if the Fed's going to raise rates, how do we even see a broadening or even other stocks make gains?
So Frank, I'm not sure that's quite an accurate read about how we're thinking about the world. What I was trying to say in the notes was that we think the market has priced in a material chance that the Fed raises rates for their next move. We actually don't think that's going to be the case. We think the Fed is basically on hold until we get to the summertime. We do think the next move is lower, but we're pretty close to the end of this cutting cycle. This is probably, the mid-90s comparison is probably the most apt one. And so, maybe one or two more cuts and we're probably there. We're probably done. But the market is concerned right now. After the Fed released the forecast that risk of inflation is to the upside, that the market's concerned that the next move is to the up. You're going to be at the Fed.
All right, so just be clear.
We don't actually think that's the case, but it's possible.
So, Scott, you think the market's pricing in the Fed hiking rates, but you disagree. You're taking a contrarian view, and that's why you're feeling so bullish about things like financials?
Yeah, but financials is certainly one place where we think actually can benefit from the lighter regulatory pressure that we think that we know that Trump is going to bring. Probably more in the small side of the financials than the larger cap guys. But financials, if you know me for the last 30 years, I've never liked financials. We never liked financials. But this is actually a place in a time where we think they could actually work, but more on the small side than the large side.